Hi and welcome to the Market Alert for Tuesday the 30th of May 2023. So we missed Monday, US closed, UK closed. So the news is from Friday. Tech top, Dow drops, bonds flop as hawkish inflation signals send rate hike odds soaring once more. So that's Friday. Hot PCE sees marked hawkish in repricing. Stocks rally anyway. Yes, just ignore the news. Just move the market to the upside. And debt ceiling deal between White House and GOP reached in principle. And it's for a staggering $4 trillion to raise the ceiling. Well, actually, this is about printing $4 trillion. They're not going to raise the ceiling until the 2024 election or something, or the decision on that. Didn't quite grasp that, because how can you not raise the ceiling when you actually print 4 trillion? But there you go. So yeah, it's 4 trillion. It'll go through, as I said before. There's no way they're not going to allow it, because it is required in order for the government to actually function. So yeah, it'll go through. And everything will then go back to how it was. We'll see the stock markets move back to the upside, and everything will be back to normal, because there's another 4 trillion to spend. Last about 6 months, I think, at the current spending rate, before we see another one. Usually get 2 now within the term of a presidency. All right, news. Other news, economic news. We've got Spanish CPI this morning. That's forecast at 3.6, previous 4.1. And consumer confidence US at 3 p.m. So the markets are going to do whatever they want to do, which will probably shake out to begin with, then move back to the upside. So let's have a look at the electronic markets from yesterday and also Friday's market action. Kicking off with the Dow. So in the Dow there, you can see that Friday we saw the market move up, as it said in the headlines. And then we've seen the market move down on the Sunday night electronic, and Monday yesterday electronic down to the 200 MA, where the market's currently finding some support. But resistance certainly above there at 50.62. Would need to drive through this to move to the upside. Failure to do this and we start moving down. We've got 38% retracement, and then 38 in all of the other fib numbers on the downside. Meanwhile, in the 30-minute chart for yesterday, the market moving up just about 70 points, back down 70 points, and then just stuck in a sideways move back to an 89% retracement there, and then moving down where the market's currently finding support at the S1 and yesterday's electronic low. So obviously we haven't got much distance between the high and the DP, purely and simply because of the electronics. So we'll go through these, and we can even go through the S3s and the R3s on the upside when you've had a holiday. So you wouldn't have the reliability at the S3 like you would normally do, where 90% plus of the time the market actually stops in this area. So just be warned about that, because of the volatility returning to the markets. In the German DAX, a bit more activity here. Germany wasn't closed yesterday. Friday we see the market moving up. Yesterday it moved down to 38% retracement, and then bounced off this overnight. In the 30-minute chart, just move this over to Friday, and you'll see there the market trading down and then moving to the upside there. Big move following the Dow on the Friday there. So yesterday moving up and then moving all the way back down, and then sideways overnight. Nowhere near the low at the moment. DP is there, and you've got the high there as well. So plenty of potential to move back to the upside there, and also to retest the low with the 200 MA there as well. In the 5-minute chart overnight, you can see the market moving up there. We moved up, we bounced, and then sideways to higher, back above the 200 MA now as well, above the close. Just need to get above the DP there. Trades for the week, £718, profit factor of 7.11, and we've got 65.38 and 34.62 there for win-loss ratio. So 65.35 win-loss. Friday was good, as the market moved up strongly there. In the US again, we've got the S&P. You can see we've moved our way down over the last few sessions, and Friday there, the big move to the upside. So we've got the 5-bar moving average just there. If the market does retrace, and if it breaks this, we've got the downside targets here. 30-minute chart just sideways for yesterday. So moving on to the FTSE 100 from the UK. Friday, the market sideways to lower, trying to move up during Friday, which is this one here because we were closed yesterday overnight. We've got some weakness there. Market came back to 62, and it's also got the 200 MA there. If it is to move to the upside, let me just bring that back. I don't know why that's just gone off. If it is to move to the upside, then these are the upside targets for this market. If not, you'll see a retest, like I say, of the 62 and the 200 MA. In the 30-minute chart for Friday, the market up, sold into heavily, which you can see there. The volume is huge, down to the double low, which is an overnight low, and Thursday's low, with the market then turning around and moving back to the high of Thursday. Meanwhile, market is sideways. We haven't got any other numbers for this one because we've missed a day's trading, and we just kicked off on the overnight. So it'll take till tomorrow till we get some levels back in. We got these ones here, and these may be the ones here, and that double low isn't a double low. I don't know what's going on there, but like I say, this happens because all pivots are based on the previous day's range, and of course we haven't got a previous day because the market was closed, so that's probably why we're seeing this. And in the currencies, GBP, JPY sideways for the last few days there, up on Friday, and then overnight sessions in yesterday sideways, just staying above the 5-bar moving average in the daily chart. In the 30-minute chart, we were down yesterday. We traded down just to the BRN, just below the DP. We then saw a bit of buying coming in. We then moved up, and overnight the market sideways, retraced down towards the S1, and now just bouncing off there. Again, everything waiting for the markets to open at 7 a.m. in Germany with the DAX futures. And in the pound, stuck in that sideways range, which we've seen, down on Friday down to the 123 level. And in the 30-minute chart, you can see the activity there. We had a bit of a move yesterday, market coming back 89, then moving up, and then continued overnight through yesterday's high, which, like I say, is nothing to write home about because of the lack of volatility and activity. Market down through the DP and down towards the low where it's trying to find some support at the moment. In the US dollar, continuing to climb to the upside, putting pressure on the metals. It looks around about 78%, 62, 78 at the moment. We'll just watch the 200 MA, see if it will actually double top and stop the up move. But at the moment, with the debt ceiling being agreed and raised, then you can expect the market to move sharply to the upside, and the metals being hammered. So let's have a look at the metals. So despite the fact that the debt ceiling being raised, printing of 4 trillion, which is inflationary, I would say that the metals are going to get crushed because they are desperate to keep these prices low so the central banks can buy gold. And as was politely pointed out to me in a comment yesterday from Jonathan, thank you very much, with regards to the US dollar going up as well. Very interesting comment, which I'd not thought about. So thanks for that. And the same with the metals, absolutely right as far as this is concerned. You know, the net zero agenda by the World Economic Forum, who were behind all of this stuff, then the suppression of the metal price, which is obviously an industrial metal as well as a monetary metal, is being used to fund all of the solar panels, electronics, etc. So suppress the price of this as much as you can, and that's why it's 60% cheaper than it was in 79 and 2011. And I suspect, even though I've retracted it once, about $20 an ounce, it's starting to look as if we're going to be heading that way. In fact, let's just have a quick look at a monthly chart of silver. You can see there that we've got the triple top that we've just come up to. So you can see that the level that they don't want it to get above is in that 26 range there. So 26.74, isn't it? Let me just delete this extension there. Yeah, so oh, sorry, that's the wrong one. That's gold. Let's try silver, shall we? I was going to say we haven't got a triple top in silver. Thought it looked odd. So yeah, that's an interesting one with gold. We'll come back to that in a minute, actually. So yeah, you can see there that the high that we had a couple of years ago was at $29, and then ever since then it's a bit more different, isn't it? You know, we're looking at 26.93.27. This time we only managed to get to let me just remove that fib if I can. I'll just slide that over. 26.07. So yeah, you can see, but also this was an 89% retracement as well, bang on there as well. So yeah, the market making its way back. $20. Let's have a look, see where we pick up at this level here. There you go. Yeah, 1988, and if we go from here up to here, well, you know, 2050 is the 89% retracement in the longer term chart there. That's what I love about the monthly charts. These areas are a lot easier to see. So just going back to the daily, you can see we're already being hammered on the overnight, and the 30-minute chart shows this already down to S2. But like I said yesterday, because it's electronic, you can ignore the S1 and S2. It'll go a lot further than this level. In the silver market, it's more about psychological levels, and the 2250 this will be, won't it? Yeah, 2250 is probably where it's likely to be monkey hammered down to next. In the gold market, like I say, let's just go back to that monthly chart. You can see that we've got a problem at $2,074, and that's why you're seeing the market being hammered to the downside. Like I say, central banks are continuing to buy at record levels, already through 62, but 78 and 89 awaits this market. $1,900 wouldn't be a surprise. 1894 is 89, so $1,900 psychological level. In the 30-minute chart of gold overnight, you can see the market already down to the S2 and trying to bounce there. I very much doubt it will, because as soon as they get the debt ceiling passed through Congress, then you will see the dollar move to the upside, even if it's only for a day. But it'll certainly give the opportunity to the metal sellers and the manipulators to actually crush the price to allow them to buy at a cheaper rate. And finally, gold-silver ratio dropped markedly on Friday, but is bouncing back already. And expect this to, like I say, head towards that 90 level before the market finally finds a bottom. Okay, that will do it for this one. Let's see how the market performs today. I suspect we're going to get a bit of a shakeout with those who want to get out of the markets to begin with. Then the market's likely to turn around, move up. What else has it got to sell off for? As we've said before in the past, what recession, what war, what inflation, you know, it's just all ignored as far as the stock market is concerned. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.